Well, good morning, ladies and gentlemen. I'm sure you all are with me in sending our deepest condolences to those victims and their families in Paris. It was really terrible global tragedy. I'm sure, again, you are with me in hoping that the global community as a whole make common efforts to prevent such the tragedies in the future. Well, this morning we have a very, very special guest speaker. Most of you have know him. If you haven't had opportunities to meet him in person, I'm sure his face is quite familiar, all of you, through media. You know, who monitors and examines and analyzes the Korean economy the closest way as the credit rating agencies, and Moody's and Standard and Poor's. Actually, Tom Byrne has been with the Moody's for many, many years. In fact, he joined Moody's in 1996 before the Korean currency crisis. So during the currency crisis, he visited Korea many times in my, as I recall, and as officer of Moody's. Of course, he spent 3 years in Korea when he was a student as Peace Corps volunteer. And so he knows Korea. He is a friend of Korea and friend of Korean people. He joined the Moody's in 1996, and then before that, he was a senior economist of the Asia Department at the Institute of International Finance in Washington. Again, during that time, he was very much interested in and then closely observed the Korean economy. In fact, I first met you when I was at KDI, it was a long time ago. He was a really young boy then, and I was a quite young man too, but since then he is a very good friend of Korea and Korean people. So he visited me some time ago, so I suggested, why don't you talk at the, and then he now moved to Korea Society in New York from Moody's, and I have very strong view that the Korea Society can and should do more in the U.S. Already, of course, Korea Society doing a lot there, but under Byrne's leadership, I'm sure the Korea Society will become more visible and do more works for laying foundation for enhancing our mutual relationship and between two countries and peoples of two countries. For that, the Korea here should pay more attention to Tom's leadership and the activities of Korea society in Washington. I was saying of the breakfast table that the Japan Society in the U.S. is established early 20th century, 1903 or 1905, somewhere around it, and then doing they are very, very active, and they're much more visible. So I just hope that the Korea Society do more on the terms of leadership. So when he visited last time and as president of Korea Society, I suggested him to give a talk here. And since he was such a close observer of the Korean economy and the the society as a whole, so why don't you share your views on the Korean economy from your very special vantage point? And you are the best person to give advices to Korean companies and the Korean policymakers. And also, since he is following the North Korean economy in the North Korea, so maybe he can touch on the North Korean issues as well. So he agreed, and he is here. And so I'm very pleased to have him. Well, before I ask him to speak, this morning we have the ambassador from Egypt, Ambassador Salim Labib, and as usual, Ambassador Redding is here from Switzerland. Actually, immediately after this meeting, I have to fly to Europe and to go to Swiss and Monterey for a meeting there. I'll stop over in London. And so anyway, so with no further ado, I'd like to invite Tom Byrne. Please join me in welcoming.
Well, I would first like to thank Dr. Sagong for inviting me, and I also thank everyone for coming here so early in the morning. And of course, I would like to second Dr. Sagong's expression of condolences to the victims of terrorism in Paris. Having lived in Washington, D.C. and New York in 2001, I think empathize with some of the emotions that the people of Paris and France are undergoing now. So I think that's very important for us to recognize that. And I have to say, and I thank you for your generous comments, and thank you for the plug for the Korea Society. I'm the new president. It's, I think, barely 3 months now. I'm the new president, barely 3 months. The Korea Society was founded in 1957. It's located in Manhattan in New York City, and it's a private, nonpartisan organization. And the sole purpose of the Korea Society is to strengthen ties between the peoples of South Korea and the United States, and to do that through fostering greater awareness, cooperation, and understanding between the two peoples. So that's what I'm doing now. Somewhat different from my previous career. When I agreed to, when I met Dr. Sagong, it was only a couple of weeks ago. It was October 30th. I was here in Seoul for a conference, a Global Peace Forum conference, Unification Ministry, the Presidential Secretariat for National Unification had organized this. And I was asked to speak on a panel on North Korean reform. And I find this an oxymoron, put the words North Korean reform together, especially since I have long experience watching reform in China, but also Vietnam, two socialist communist systems that underwent reform. At any rate, I'm left with this presentation today that is really a hybrid. In fact, it reminds me of those satellite pictures of the dark North Korea at night and the very bright South Korea at night. And I think the same metaphor could be applied for the status and progress of reform in both sides of the peninsula. North Korea is still blacked out. South Korea is very bright in that regard. So anyway, I agreed to I thought this was a terrific idea, but I thought this would be an informal conversation with a group of us sitting around a table. Me talking from my notes. I really am very impressed with this. So I'm glad I stitched together a PowerPoint presentation to give some structure to this. It's very challenging for me to do that because we have a very lean staff at the Korea Society. Don't have all the resources I once had in many different cities every time, round the clock, working at Moody's Investor Service. But at any rate, the first part, I'll try to go through this quickly, more efficiently. The first part is on South Korea, an economic retrospective and prospective. And looking back on any economy, it's very complex. So I'll highlight the features that strike me most, that I had to focus on most in my previous work, both at the Institute of International Finance and also at Moody's Investor Service. And of course, looking back at an economy is a very complex thought process. Looking forward is a very conjectural process. And I'll try to, again, focus on the features that I find to be particularly striking. So the summary points that I would like to make is that, one, South Korea has emerged stronger from the two crises in 1997 and 2008. And again, Korea is actually an exception. Not every system, not every economy has emerged stronger, particularly from the 2008 crisis. Secondly, fiscal, financial, and institutional factors have strengthened over time, both relative to peer countries and also in the sense of Korea itself. And then looking forward, I would say prospects are relatively favorable for Korea, not only vis-a-vis the other advanced countries, but also most emerging markets. And Korea straddles both categories, but I think mostly it's an advanced economy. However, management of structural challenges will determine the pace of Korea's convergence with the advanced economies, the most of the advanced economies or the highest advanced economies. And again, most economies don't progress in advance and don't converge, so Korea is an exception in this regard too. The pre-crisis setting, I was looking at the Institute for Global Economics 20-year summary book that Dr. Song Sagong gave me back on October 30th, and I was struck. There were two lectures that were held at the IGE. One of them, my former boss at the IIF, gave a lecture on the lessons from the Mexican crisis, 94 crisis, on South Korea. And so he made this statement. Now, this was done back in February 1995, that one of the lessons for South Korea and other leading emerging markets is that they should not be complacent, because complacency costs dearly. And I think to some extent in South Korea at that time, there was complacency, or there wasn't an awareness of the risks and how to manage the risks properly. There were also were deficiencies in transparency at that time. I didn't want to put in too many PowerPoint slides, but shortly after that talk by Charles Delara here at the IGE, Hugh Patrick, professor at Columbia University, gave a talk in May 1996 on Japan's banking difficulties. And he made the conclusion or observation that Korea, like Japan, lacked an effective financial system, had inadequate prudential supervision, and also lacked in transparency. And so Professor Patrick concluded that Korea, like Japan, had a long way to go to achieve a more efficient banking system. Again, I think both very prescient comments on Korea and very applicable and describing the pre-1997 situation. Since then, things have changed dramatically, particularly after 1997 crisis in many ways. I think the regulatory apparatus has been strengthened in South Korea with the FSC and the FSS. The Bank of Korea adopted inflation targeting. It's observed that, by and large, this has been successful in anchoring inflationary expectations, although other things have gone on at the same time that have kept inflation low. And I think most tellingly, in terms of increased transparency and a sense that Korea, the policymakers, will not be complacent anymore. This is, I think, embodied in the financial stability reports that the Bank of Korea has been publishing since 2011. And they publish this index in the financial stability report, the most recent report being in June. And it shows how before they were doing these reports, there was a lot of instability in the system. Now, going into potentially a challenging time with the China growth slowdown and the imminent U.S. Fed liftoff, Korea is very well positioned. And the blue line is below the warning stage level. And what the Bank of Korea, of course, is looking at is six different aspects of financial stability, and they're all here, including bank soundness, foreign exchange soundness, household and corporate debt structures, and financial structures. And I think this ability of Korea to face up to the challenges, and as Machiavelli said, don't let a crisis, don't let the opportunities that a crisis have go untapped. I forget the exact words, but it was Machiavelli who said that. So what we see is that in terms of broadly speaking, economic and financial fundamentals as reflected in a credit rating. These are Moody's credit ratings. I actually failed to footnote that. Back in December 1997, the rating was one notch below the so-called investment grade threshold. And Korea now is AA3, meaning very high credit quality. This is particularly striking because in the advanced economies, particularly since 2008, and Korea's credit rating has advanced from pre-2008 crisis from A2 to A1 to AA3. Most advanced countries either have overall stability in their economic and financial fundamentals or a deterioration. We saw that particularly in the case of Ireland, Spain, which were AAA and no longer AAA, in fact rated lower than Korea currently is by Moody's. France is no longer AAA, it happens to be AA2. The UK, AA1. So this overall deterioration that really reflects the weakened growth performance and prospects, but also the increase in government debt. And I'll show you how Korea compares with those countries. Now, I put in 1993 because that happened to be the year when the International Dr. Salgong's Institute was founded. Korea was rated A1. Perhaps there was some complacency in the people who were doing sovereign ratings at Moody's at that time. I should say that was, it just happened to be before my time, maybe by the grace of God. I wasn't at Moody's. But also, the rating agency did not use a methodology for its sovereign bond ratings, and I think that's very important. Methodologies in sovereign ratings were only introduced in 2008, and then they were modified in 2013. That was actually a project that I led. And then originally, the rating agencies like Moody's, the initial rating on Korea was A2, again, looking at things but not really appreciating the risks in the system. So that's the rating trajectory. But the important thing to notice is this very marked progression from a relatively low rating to a relatively very high rating in this short period of time in economic history. I think this is unique, really, in any global system. So, what underpins Korea's exceptionalism in this regard? Well, one is the fiscal fundamentals. If you look at Korea's budget, you can see that the green line up above, Korea generally is running a budget surplus, whereas other peers, and I put the advanced countries here, but I also have Taiwan here too, have been running budget deficits, some of them very large deficits over this period of time. So Korea has demonstrated fiscal discipline. And with the budget surpluses, this is on an IMF accounting basis. Excluding that, they're very small deficits. Korea's debt burden is also moderate. It's the greenish line at the bottom, in between 30 and 40%, slightly rising, but much lower than the advanced economies. And if you look at the UK, the pickup in debt following the global financial crisis in 2008, and other countries as well, Korea did not experience this. It kept the fiscal discipline during this very trying time economically. Next, well, not everything, of course, is rosy. There are risks, and the biggest risk to Korea is its public sector off-balance sheet debt. This is not on the balance sheet of the Ministry of Strategy and Finance. However, South Korea is coming to grips with this. Again, a reflection of a lack of complacency, a willingness to avoid complacency and to deal with problems. So the Korean government has this plan to reduce public institution debt by reducing the debt equity ratios. And the plan is a 5-year forward rolling plan. The original plan is in the dark line, the trajectory that was envisaged at the time. The plan was modified in 2014, again in 2015, and you can see the steady progress, even better than originally planned. So this contingent risk to the government's balance sheet is being effectively dealt with. Moreover, particularly in contrast to the problem with China, in the case of Korea's public sector debt figures, what you see is what you get. Korea is only one of a handful of countries that subscribe to the most rigid framework for analyzing balance sheet and off-balance sheet public sector debt. I think there's only 5. It's a World Bank, IMF group. And so this is a very high degree of transparency. Again, very sharp contrast to what existed before 1997, Korea's first crisis that I talked about. Next, the external vulnerability. I think we all remember back in 2008 how Korea was losing a lot of foreign exchange reserves with a sudden stop in credit after the Lehman bankruptcy. In fact, I remember that very well because I was visiting my daughter in college. And she happened to be at the University of Colorado at the time. So I was like 15 hours behind my colleagues in Hong Kong. And we decided to write a special comment on Korea at the time. Now, Korea, I believe, just had arranged the currency swap with the U.S. Fed, and so our comment was, Korea is under pressure, but these pressures are manageable, particularly with the currency swap. And so we maintained our rating on Korea. We didn't even put a negative outlook at the time. However, I do recall I spent all night working on this paper because for me it was nighttime Sunday. And I felt like I was in college again. And in the middle of working on this, my mouse broke. And I had to go over to my daughter's house and get a new mouse so I can continue working on this. But we got the paper out in about 12 hours, a statement that we thought Korea could manage this crisis without having a rating downgrade. So what you see here is, I think this best encapsulates the whole external position of a country. It's the international investment position. So it's a balance sheet of all the sectors in the Korean economy vis-a-vis their asset liabilities with the rest of the world. The central bank, the commercial banks, the companies, the corporates, and the private individuals. A low point was reached before the global financial crisis. This is the 213.9 billion figure. And this deficit, or the net liability position, was gradually reduced. And for the past year or so, Korea has had a positive feature on the net international investment position, which is really unusual, even for an advanced economy. Now, the reason for this is the red line here. This is just looking at the debt instruments, not the equity-like instruments like foreign direct investment. And you can see the red line. There's been a containment of the buildup in foreign exchange debt or external debt. It could be held in Korean won, but it's non-resident holdings of assets in Korea. Whereas the blue line shows the increase in assets, Koreans' claims on others outside of Korea. So Korea now, as we saw in the previous slide, is a net creditor. But it's done this in large part by better risk management, and I attribute that to better prudential management on the part of the regulators, and also even in the banks, in Korean banks, we noted, the bank analysts and Moody's Investor Service noted that risk management had improved. Now, if I had put China here, that red line would be like the blue line, probably with a steeper upward slope. During this period of low interest rates in the U.S. Mainly, but also with the UK and Japan, a lot of borrowers have taken the opportunity to borrow dollars cheaply. Of course, they face the consequences of that business decision will have to be faced in the next year or two with a Fed liftoff. I mean, the costs of doing that. However, Korea refrained from leveraging up with seemingly cheap dollar debt that may prove to be a very costly dollar debt in the future. And so this external asset position has added monetary policy space to Korea. And Korea, I think, as opposed to other countries in the region, has, particularly China, has ample monetary policy space, if needed, to face pressures, say perhaps pressures coming from effects that could be severe, but probably won't be all that severe with a Fed liftoff. We see that, I believe these are the October figures for Korea. The base rate, the policy interest rate, is still in positive territory for Korea. That's not the case with Japan, and it's not the case with China. The CPI came down from the previous month when it was 2.0 in China, and this is for China, it's the deposit rate that I'm using. And again, the net international investment position, instead of in dollars, we see it in a percent of GDP, not quite as big as Japan or China. And the foreign exchange reserves, again, not quite as big, but for the Korean circumstances, a very adequate level of self-insurance that Korea has, which gives some freedom to monetary policy and adds monetary policy space. And so with this monetary policy space, low inflation, this has spilled over into government finance. And Korea Treasury bond yields have tightened, along with the easing of interest rates in Korea with the BOK policy easing. Of course, the world is interconnected, and KTB yields are influenced by U.S. Treasury yields. However, it seems to be that the big influence on KTB yields, again, this is just casually, maybe an economist could do something very quantitative and have come to a slightly different conclusion, is that there's some degree of decoupling between Korea and the U.S. Treasury bond yields, which, if that's the case, is good going forward, because we see in the most recent months here, this, I believe, is from the the Bank of Korea Financial Stability Report. Just copied this exhibit. There's a gap there between the U.S. Treasury bond yields and the Korean Treasury bond yields, with the Korean yields, again, following the BOK base rate. So this leads to fiscal policy space, and this is where Korea especially stands out as exceptional. The gross financing needs are very low in the case of Korea. This is what Korea needs to borrow the Ministry of Finance to finance its current year budget deficit, as well as to refinance debt falling due. It's only 2.9% of GDP. China, it appears only slightly higher, but this includes the off-balance sheet local government debt, including that debt on a generalized basis, which the IMF calculates would probably double that number. Japan is an exceptional case, an exceptional country in many cases. The home bias allows it, and low interest rates, to have such a huge gross refinancing need. And I put Spain here, a country that has faced fiscal challenges. typical of many countries in Europe that have faced fiscal challenges. And you can see that the gross financing needs are way higher than the case of Korea. And moreover, they face the risks that Korea doesn't, in that non-resident holding of government debt, non-residents may have a different risk perception, non-residents may have to liquidate their debt if their own banks, for example, or investment companies are running into liquidity problems, is much higher. In the case of Ireland, Greece, and Portugal, the non-resident holdings of government debt were almost twice that before the euro area crisis in 2010. And this just goes to show you in a broader scale how low Korea's gross financing needs are, very similar to AAA Switzerland, and much lower than the other OECD countries here. Japan's excluded because it's so high it would throw everything off scale. So practically speaking, what does that mean? Well, Korean debt is more affordable with such fiscal space. The yields on 10-year government bonds are volatile. I just took November 12th. Korea and the U.S. were just about the same. China government has to pay more to issue debt, even though the national savings rate is something like 50%. There's only one other country in the world now, unless Luxembourg, and that happens to be Switzerland. The Middle East countries, the GCC countries, no longer have high national savings rate with the collapse in oil prices because they don't have large budget surpluses anymore. So again, this is a practical benefit of all this fiscal policy space, prudent macroeconomic policy, prudent macroprudential policy. The government pays less for its debt. Now to the perspective part. These are projections taken from the most recent IMF outlook, and you can see that in the case of Korea, you get growth probably moving up above 3% if the IMF is right over the next 5 years. We see the slowdown in China, the lackluster growth in Japan, relatively lackluster growth in the United States. However, Korea, even though Korea doesn't achieve the 4% target envisaged by President Park when she first took office in her 474 vision, probably around better than 3% going out over the longer term, which is not all that bad compared to the lackluster performance in the rest of the world. So Korea continues to outperform the major advanced economies, and of course the emerging markets tend to grow a bit faster. We'll see if they can actually get their growth up to 5%, given all the challenges they're facing. So what goes behind these growth outlooks? The growth outlook that the IMF has for the various countries. Well, if you look at Korea, Korea's an open economy. Exports are very important to growth. What we see here, I took this from the Bank of Korea Financial Stability Report, is that there's a lot of factors affecting export growth for Korea, but if you look in volume terms, Korea, that's the middle bar there, the middle row, Korea continues to outperform the demand for global imports. The most recent period, 2012 to 2015, slightly above the rate of growth of global import demand. And previously, maybe a little better than that. And it seems to be immune from, there's a lot of concern in Korea that Korean exports would lose competitiveness with the appreciation of the yen, but that's not really the case. I think there's two reasons for that. One is that head-on-head, this is KITA, has an export sensitivity index. I might be getting the name of it wrong, but KITA, the Korea Institute for Trade, the Korea International Trade Association publishes this. They conclude that about 1/3 of Korea's exports compete head-on-head with Japanese Japanese exports, so most of Korean exports are not very competitive. I hope I got that figure right. That's from my memory. Another is that with the weakening of the yen, the Japanese corporations are not reducing prices, rather they're trying to maximize profits. So the Korean exports that do compete head-on-head are not as disadvantaged. Going forward, what could undermine this? I think it's a fairly optimistic outlook on Korean growth between 3.5% roughly. Well, the biggest risk factor over the medium term, according to the Bank of Korea, is household debt, persistence of low economic growth and inflation. I think that has to do with the global economic situation, the Chinese economic slowdown, and the U.S. interest rate normalization. My own impression is that over the medium term, near to medium term, the Chinese economic slowdown will have not a great effect on systemic risk in Korea, but certainly on macroeconomic performance. Looking at household debt, I just wanted to make one comment here. Again, this is the Bank of Korea governor identifies this as a major risk factor. However, what you see is that even though household debt is high relative to GDP or to disposable income in the case of Korea, it's higher in many other European countries. So it's hard to draw conclusions over what implication this has for financial stability or economic growth, although I do think the conclusion on economic growth is pretty tangible. It impedes private consumption expenditure, and that detracts from economic growth. Because the countries that are the systems that are more highly leveraged, the households are more highly leveraged, include both Switzerland, which is, I think, a very stable system, and Ireland, which was not a stable system. So it's hard to draw immediate conclusions from high household debt, looking at international comparisons. Lastly, I think this is the last slide in this section. So what does Korea need to focus on? Well, it's really not my role to give policy advice to Korea. So instead, I'll just echo the advice that the Bank of Korea governor, Lee Ju-yeol, mentioned, and this is his speech commemorating the 65th anniversary of the Bank of Korea. And that there's three factors, basically: sectoral imbalances, and I think he's talking about perhaps say, construction and shipbuilding, but particularly shipbuilding is going under a lot of stress right now with the collapse in global trade and the collapse in oil prices. Maybe too much of a reliance also on large corporations rather than small corporations for employment and investment. Labor market rigidity. This is a case where Korea is exceptional in the OECD, but not in a good way. It's one of the most rigid labor markets, and I know that the Deputy Prime Minister and others are having efforts to ensure that this tripartite agreement to allow more labor flexibility in terms of non-performing employers so they can be separated from the firm. We'll have to see how this plays out, but I think this would be very crucial that a constructive, more flexible labor market would help ensure Korea's growth prospects, fairly favorable growth prospects over the medium term. And then excessive regulation, and this is coming from the Bank of Korea. I think this is a remarkable statement. And this statement about excessive regulation was also echoed even more recently on October 28th in the economic review meeting that the Bank of Korea governor has with various economists and knowledgeable persons in the field of finance in Korea, where they concluded that to promote business activity, Korea should ease unnecessary regulations affecting business. So with these challenges as effectively met as past challenges, I think the scenario that Korea will grow more than 3%, have stable inflation, is a solid baseline case looking out prospectively. These are the 3 points. North Korea's latest reincarnation of, or formulation of economic reform, Byungjin, is incomplete and piecemeal. And external reform requires external opening. We saw this in the case of Deng Xiaoping in China with the opening and reform policies that were announced at the 11th plenum of the Central Committee of the Communist Party. And that another comment that even if North Korea were to start genuine reform, sustained economic advance is very rare among frontier market economies. So quickly, what I thought I would do was kind of look at North Korea through the perspective or the vantage point or the prism of a frontier market economy. And these are the more basic, the countries that are just entering the international global financial and trade system. They're also characterized by a lack of access to the private capital market, rely very heavily on concessional aid from bilateral aid or else multilateral aid. And so what we see is that, well, first of all, systems move into the frontier when they open to trade and investment. And you can see how the openness, the trade as a share of GDP is pretty high for a lot of these countries. I don't know exactly what it is in North Korea, but I do know that North Korean trade is opportunistic, and it's contingent on political developments. Nick Eberstadt at the American Enterprise Institute did a study on looking back to 1960 and analyzing North Korea trade. What you see is that depending on how friendly North Korea is with countries it borders, so it's China, Russia, South Korea, trade will pick up. However, the baseline trade with the rest of the world, essentially has not changed in dollar terms since the 1960s. So North Korea rather, is not an open economy, an economy geared to trade with the rest of the world. In fact, the composition of trade, I believe, has also not changed since the 1960s, and that's really a remarkable statement as well. So North Korea is not as open as the frontier markets. But even if it were, frontier markets face many constraints. One of them is the balance of payments constraint, where the frontier market economies tend to have much wider current account deficits than emerging market economies, and this is because of the lack of savings in the system, government savings, corporate savings, and household savings. And therefore, they have to rely on foreign savings for investment. And then, to sum this up, this was actually a study that I was working on at Moody's right before I left, and was published subsequent to this. And so what we looked at, we defined emerging frontier market economies in various ways. You could argue whether some of these are emerging market or frontier markets. But there's a remarkable development, and that's this notion of credit entropy, of where systems become more disorderly over time. So systems don't naturally converge. In fact, Michael Spence, the Nobel laureate, I think specializes in the so-called middle income trap, and most countries get caught up into income trap levels. Only a handful of countries have moved above the middle income trap, and Korea is one of them. The other East Asian economies, such as Hong Kong, Singapore, Taiwan, are the others. But countries get caught in emerging market traps and also frontier market traps. Here, we looked at the date, assuming that the credit rating is some proxy for overall economic fundamentals in a country. The orange lines show that a deterioration in the economic fundamentals since the rating was originally assigned, and all these ratings were originally assigned in the past decade or so, or more recent to that, with one exception, Bolivia. So extrapolating, if North Korea ever were to move into the frontier market level of development, it would still face very, very severe challenges. And the challenges, I think, are mainly due to the second point. The political institutional factors really hold back reform in North Korea. And even if they do embark on reform, the sustainability of reform, I really won't consider that North Korea is serious on reform until it has a reformer, one, in other words, a Deng Xiaoping or a Zhu Rongji, but first a Deng Xiaoping who could turn the system around. Remember, he turned China around from the Cultural Revolution into a reforming economy. And so for that, if North Korea were to approach the IMF or World Bank for membership, or the WTO for membership, then I would think that North Korea is seriously interested in economic reform, or in expanding the Kaesong Industrial Zone, replicating it in other parts of North Korea. So that's my point there. In the meantime, what can we do? Probably not all that much. President Park's Northeast Asia Peace and Cooperation Initiative is a long shot, but it's probably the only one on the table. And if there were a bonanza, as President Park said at her speech in Germany, I think this would require a lot of time and a lot of work in North Korea. And I don't think North Korea has really started that work yet. So those are my quick comments on North Korea. Thank you.
Quick overview of the Korean economy from his very special vantage point. And actually the bottom line of Tom's view on the Korean economy is rather optimistic, or at least he thinks Korean economy is doing okay and better than many other advanced countries, OECD countries. And then he touched on very briefly on the North Korean economy and major challenges and the policy tasks. Well, with this, why don't I invite questions and comments from the floor? Okay, Dr. Kim, please. Yes.
Mr. Byrne, thank you very much for your talk. Most of the sessions concerning economies, in fact, I should say all the economies talks, centers around the GDPs, the purchasing and managers' predictions, etc., the real side of the economies. But you are the only one who really presented the other side from the credit rating kind of views, which is very illuminating. In spite of all those things, one thing which I'm missing in all those talks is the degree of reliance an economy has on external trade, on its stability or the projections in the future, particularly in the case of Korea, is very, very high compared to its neighbors. Its GDP in relating to the external trade. And how do you see about that is one question. Another thing is regarding North Korea, this is one of the most paradoxical situations. The most closed economy, yet not using its own currency in internal trades. Most of the people come from Pyongyang. I say, how do you pay the bills and the restaurants? They never pay with the North Korean currency. It's all the euro, dollars, Chinese yuan. I don't think there's an example in the world history, an economy so closed as using the foreign currencies to operate in the economies. How do you view its prospects of, I mean, regardless of policies, etc., how do you run the economy without its own, not relying on its own currency? Thank you.
Okay. Why don't I invite other comments, one or two, and then, okay, now, as of now, why don't you react to that questions? Yes.
In fact, this recognition that Korea must improve its external competitiveness was a driving force, I understand, behind Korea entering into free trade agreements. Korea is the most free trade agreement intensive country in the world. That could change if the TPP is implemented. Of course, it would change again if Korea does join the TPP. But and this decision, I understand, was taking, again, it was a lesson learned from the 1997 financial crisis, where Korea had to go out and become competitive. And so therefore, Korea decided to sign an FTA with Chile. It was its first FTA signed in 2004. But that gave there were economic benefits were very dramatic from that, both in terms of Chile's exports to Korea, Korea's exports to Chile. But the Koreans also, the negotiators, learned how to negotiate a free trade agreement. They learned how to deal with political opposition to free trade agreements, and it paid off very well with the EU free trade agreement and the US free trade agreement, which is very contentious here in Korea. So what I'm saying is that it's almost a fact of life for a country that's large but not very large, where you don't have this huge continental economy like China or even the U.S. But also it's very important for another aspect is when a developing country catches up with advanced countries, its industries can be more competitive. The only way they can become more competitive is through competition in trade with countries that are advanced. So I just think it's a fact of life that Korea will have to manage. Your second point, the high degree of, what we call is dollarization in the North Korean economy, even though I don't know if dollars are, if you get executed for holding a dollar in your pocket in North Korea, whether they're euros, renminbi, or whatever. But we see this is a common feature in frontier market economies, a very high degree of dollarization, because the citizens don't have confidence in their own governments and their own institutions. Often it's very inflationary, so a hedge against inflation is to hold hard currency. And also the banking system is so undeveloped. I know this was the case in Vietnam when I first started to work on Vietnam back in the early 1990s. You weren't assured you can get your money out of the bank. The bank might not have the liquidity to give you the bank, your Vietnamese dong. So it was a very highly dollarized system back then. Things have changed in Vietnam. But this is a feature, again, of a very backward economy, very weak institutions, very weak political systems where citizens prefer to hold hard currency.
Okay, Mr. Yu.
Well, one is very quick comment, and the other one is a question, but very little things to do with today's lecture, as a matter of fact. But one quick comment is why there are so many Dr. Dooms around the globe nowadays. In looking back to Korea's history, it is really a history of innovation. We kept trying to innovate ourselves and taking risks in order to achieve the things that others cannot and could not. So we moved on and we achieved a kind of historical performances. And at some point of time, we looked back that we lost the invaluable assets that our early developing ancestors showed us. So we are always talking about whether we lose what we have as of now, and are we safe or not? Are we, to what extent we are safe from possible default risk, etc. So that is my quick comment. Second one is, I just one time visited the Korea Society office in Manhattan. It's, as far as I know, there are several other societies, non-for-profit societies based on countries, based on regions. As a new new head of the society, how would you assess the Korea society vis-a-vis other bigger societies? What are the challenges in running the society as a non-for-profit organization in terms of resources, in terms of visibilities, in terms of political support? Mm-hmm. Thank you.
Well, so I won't comment on your comment. But in terms of the Korea Society, this certainly, I would call it a lean organization, or relatively small, say, compared with the Japan Society. However, we tend to be very efficient. I think we have a very good array of programming, again, that meets the need to increase awareness, cooperation, and understanding between the peoples of the two countries. I think the challenge going forward is to stay relevant in our programming, both cultural, education, as well as policy related. And I think going forward we'll put a greater emphasis, as Dr. Sa-Gong said, on economics, finance, and business, interest between the two countries.
Yes, Mr. Dan Kirk, please. Yes.
I'm Don Kirk. I'm just wondering what effect you think some of these fights that go on in chaebol successions. We have the Lotte Group and problems and questions, I should say, about Samsung and Doosan has had its troubles. Kumho has had its troubles. What effect might this have on this rather rosy assessment and forecast you're giving regarding the Korean economy? Thank you.
Okay. Well, I would characterize my outlook not as rosy, but rosy would be 4% growth or something like that. Okay. There certainly are challenges, but I think it's a sober assessment. That's how I would put it. Not on the doom side, not on the rosy side, but right in the middle. Balanced assessment, perhaps. Well, first of all, the Korean corporations, despite all these, I should back up and pretty obviously, I said when I looked to begin with my talk, I said that looking back on an economy is a very complex system. You can only, particularly in this period of time, focus on certain features. And the one feature I didn't focus on was the corporate sector in Korea. Briefly, the corporate sector has been going through a period of deleveraging. Of course, we see that partly reflected in the net international investment position of Korea. But at the same time, there are a fairly high number of companies that are under financial distress because they can't. Their interest expenditure is higher than their operating income, and this is a case where probably more structural reform has to be made. That's my focus. Where I think the major challenges are in the corporate sector. Regarding the whole chaebol, I really don't know what to say about this because it is this ongoing feature of the Korean system of management succession. I think coming from my credit perspective, uncertainty on management succession is probably not a positive feature that would be positive. It's not a feature that would be positive reflected in an assessment of the financial fundamentals of a corporation. So that's really an issue for, I think, another conversation. But again, if I could answer it indirectly, is that where I see the greatest challenge for Korean corporations and the regulators is to ensure that if any support is given to a company, it's a viable company. And I'm just echoing statements made, I think, by the Deputy Prime Minister and also the Bank of Korea governor. For the system as a whole, they're declining. You could see that in the financial stability report by the Bank of Korea. They've been on a declining trend since the global financial crisis.
By the way, as you know, the Don Kirk has been with Wall Street Journal for many years.
New York Times, too.
New York Times, and then now is freelance journalist, very distinguished journalist.
Thank you.
Actually, you just said that your bottom line is not really rosy, but as I said, it's doing okay. I think your statement is correct. In my view, I think 3.5, 3.6 is too low. Even U.S. Presidential candidate now saying that U.S. growth potential will be enhanced to 4% level. I think theoretically it can be done. Of course, it will be very difficult, but it can be done theoretically on paper. But in Korea, I think we can raise our growth potential 1 percentage point may not be that impossible at all. If you take 5 years time span, I think it can be. It is doable. It can be done. I think currently the growth potential is somewhere around 3% or below 3.5%. which is far too low. But we have a lot of room in the productivity the improvement area with all kinds of structural adjustments and reforms. So our systemic efficiency productivity can be substantially improved. And then, of course, the female workforces can be better utilized on the labor side. But again, that will also help enhance the growth potential. But I think the main thing is the productivity area and also investment area too. If we establish a business-friendly environment here in Korea, then I think business will invest more, and foreign investment will come in more too. So I think it can be done as if there is a political will and political commitment and political the cooperation. But anyway, so that's my view, and so 3.6 is not really satisfying, but compared to other developed countries, it looks okay, but I think it is not really okay for us. Okay, now, you served as regional manager when you were with the Moody's, so you know you've been following up on the Chinese economy and Japanese economy as well. So what's your view on the Japanese economy and in this with the Abenomics and policies? As of now, Japan's credit rating is as compared to Korea's what? Is it about same or below?
Actually, it's one notch. For Moody's, I still remember this.
Yeah.
It's only 3 months ago.
Yeah.
I'm not sure about the others. It's one notch lower, actually.
One notch lower than Korea, right?
Yeah.
Yeah, so that again, I think if you look at from macroeconomic statistics side, particularly sovereign debt and everything is so bad. But I think in manufacturing side, fundamentals are very, very strong. But in any case, what is your take on the future of Japanese economy? And then China. Do you think this China's new normal or Xinjiang can be smoothly achieved and China can still move on?
Yeah.
Okay.
Regarding Japan, the big challenge is that there's not enough growth. Part of this is because of the demographics that Japan is facing. The labor force is shrinking in Japan. I think that started a while ago, 1995. The Bank of Japan is very transparent, actually, and the governors have wonderful speeches that they give. This was a speech that Shirakawa made, former Governor Shirakawa, on the challenges facing Japan. So one's demographic. Japan is facing this more intensely than, say, Korea, China. Italy is another case. Germany has demographic pressures going forward. Another is, quite simply put, a lack of investment. Corporations are sitting on huge cash balances, and the share of GDP, I forget the exact number, I think bigger than the Korean corporations even. And so they're not investing it because of a lack of domestic demand. I think some uncertainty over business conditions in the business environment. Prime Minister Abe is moving in the right direction, I think, in lowering the tax rates. And now the U.S. has the largest corporate tax rates in the world. Japan used to be tied with the U.S. with tax reform. It's going down, but it's still relatively high. The big challenge, of course, is if you can get corporations to invest more in Japan, I think that will help give Japan more time, more breathing space to remove this debt overhang that threatens the stability of the economy and the financial system. Japan did this before. In fact, if the global financial crisis hadn't occurred, most likely Japan's budget would be in balance. Now it has a very large deficit, and the goal to eliminate this deficit, the goal is to eliminate the deficit by 2020. It's still a long-term thing. But Japan achieved this this fiscal consolidation before the global financial crisis through reform, the Koizumi-era reforms, most notably the cleaning up of the banking system and getting out of the zombie corporation phase that burdened the banks with high NPLs and very weak asset quality. So Japan's demonstrated in the past that it can make progress with reform. With Koizumi, the big thing is the third arrow that really hasn't come together yet to take off from the initial boost that fiscal stimulus and monetary easing has provided to the economy. So that's my take on Japan. In regard to China, I'm reminded of a quote by Mao Zedong where he says something like, "Revolution is not a tea party," or writing an essay. He also said it's violent. And economic reform is also not a tea party. There's a lot of volatility involved in economic reform. So I'm not surprised on one hand that we saw the shocks with the China devaluation, the stock market collapse, and all that. That's part of the reform process. It's also part of a process where the institutions are not really strong enough to deal effectively with imbalances that have built up and with the shocks that come from reform. That being said, I take a long-term view I have a long view on China, that China has this basically an aspiration to become a great power, and to do that, it needs a strong economy. In the past, China has demonstrated that it can take the reforms when necessary, and as I mentioned before, the 11th plenum, the third plenum of the 11th Party Congress, the third plenum of the 14th Party Congress, when Zhou rose to the forefront, massive reform all across the board, banking, financial system, foreign exchange system, state enterprise system. Now the third plenum of the 18th Party is also at that juncture where they have to take very, very, very strong reforms. In some areas have made progress, in other areas less so, such as in reining in the state-owned corporate sector. To some degree, what we're seeing in China is the reform process unfolding, the rebalancing of the economy. The old economy, manufacturing, is weak, in part because of the excess capacity, lack of domestic demand, in part because of the lack of external demand. Exports are shrinking in China as they are in Korea. Fixed asset investment, I just noticed, is only running at 2%, whereas in 2014 it was in double-digit range. So this process is going on. On the other hand, the new economy is growing. Consumption is doing pretty well. Alibaba is doing very well. And it's the services where China has the most scope to grow, because the services are very heavily dominated by the state sector. Manufacturing is not. It's almost paradoxical. So with a downsizing of the state sector, if that's possible, a greater increase in the private sector and the services, coupled with this ongoing natural growth that comes through urbanization. In China, the urbanization rate's only, I think, about 55%, something close to that. Normally, countries max out at the 70% level. So there's a lot of productivity gains and economic growth that can be generated over the long term from urbanization, from reform, if there's no financial crisis in between.
Okay. We are really looking forward to see your leadership role at the KEI. We have to let him go, and because he has a couple of press interviews lined up after this session, and also I have to catch a flight too, and so we have to end here.
Yeah. And thank you very much,
Dr. And I'm sure with his new hat, he will visit us more often, and next time you come again, we'll have another.
Thank you. Thank you very much. Thank you.
Thank you.